What's up, everybody? Welcome to today's episode of the Daily Dose. Today is Friday, August 5th, and we got the jobs report today, and it over doubled the expectations. So the consensus was that we'd have a job growth of 250,000 jobs, and in reality, we saw 528,000 jobs added. So in addition to that, we also saw the unemployment rate fall to 3.5%. So we've pretty much added all of the jobs that we've lost from the pandemic, and stocks in the futures, when this was announced, went down sharply, and then we opened in the red, and we pretty much bought almost all the way back up to finish even. We're pretty much flat. The S&P 500 was down like 0.16 today or something around there. And to me, that showed that the retail sentiment was still bullish, but I don't see it that way. I still am standing by my statements that the Fed is going to continue to tighten the economy to get inflation under control. We still have not seen anything to tell us that inflation is under control, aside from the price of oil falling. But other than that, the Fed has said that they're not even close to being done. So that should send stocks lower. We've rallied in the S&P 500 like 12 or 13% since the June lows, and nothing has changed except for geopolitical tensions have gotten worse, and the Fed has continued to say that they're not close to fighting inflation. So to me, that little bull run that we just saw was kind of based off of the Fed maybe pivoting and inflation being under control. But if we're adding jobs this strongly, that tells the Fed that they can tighten even harder if they want to, because it's not affecting the labor market as of right now. So if anything, this is what the Fed wanted to see, that they can tighten the economy without it collapsing the job market. So in reality, that should send stocks lower than where they were even in June. So I think that the markets are getting a little bit ahead of themselves, especially in the past couple of weeks that we've risen 12, 13%. So just that's something to keep in mind. We're going to get into that a lot this weekend in the weekly wrap. And yeah, so this is just restating it. This article says that the S&P 500 has gained over 10% as investors grew optimistic about a potential pivot. The Fed, even before these job numbers came out today, the Fed has given no indication that they're even close to pivoting, that they could keep raising rates through the end of this year and through next year. So that's your best indicator what the Fed is doing. If we're in a QE environment or a QT environment, and we're going even farther into a QT environment, and this jobs report only solidified that that's going to be the case. So nothing to be bullish on with the S&P 500 as of now. So we were pretty much flat. I want to pull this up for a sec. We opened in the red after that jobs report came out. I think smart money dumped, and then the retail came in, and we finished flat. But if you go out to the 6 months, zoom out a little bit, we'll look at this weekend as well. S&P 500 is still sitting at a resistance, a pretty big resistance. And after that jobs report, I mean, it just makes sense for the market to sell off, and we're at a technical level for a sell-off. And let's just see if we can find a trend line right here. I know this is what we usually do during the weekly wrap, but I just want to see if you draw a trend line from there through here. So if you're looking at a trend line like this, you could see a little bit more room for gains. I would be surprised if we saw that. If you draw one through, yeah, you really don't. You really can't find anything technically with a trend line that says that we should sell off. But really, you just have this level right here. So as you can see, it bounced off of here twice, 3 times, 4 times. Let's get rid of these so you can see that better. So this is the level that I'm looking at. So in the past, this was used as a resistance, broke through, support, came back down, support, broke through, resistance, and now it makes sense for it to be resistance again, especially in the macro environment we're in. So that's how I see it at the moment. Let's take a look at Bitcoin. Bitcoin's in the middle of no man's land. We saw weakness yesterday. We see a little bit of strength coming back into it today. It's sitting right under 23,000. Again, there's a lot going on in the Bitcoin market. It is really correlated to the NASDAQ, which is at a big resistance level as well, similar to the S&P 500. But also, we saw that Coinbase partnership with BlackRock bringing Bitcoin to institutional investors. So Bitcoin's kind of in the middle of no man's land. We're still in this little crypto winter. We're down. Let's see how much we're down from the top here. Trend line. So if you take this from the top to where we are right now, we're down about 66%. So it's not looking super bullish or super bearish on Bitcoin at the moment. Again, it's kind of just stuck in this no man's land. We kind of have a series of a higher high, higher low, higher high. If this turns into a low, a higher low, a very slow churn upwards, but we'll have to see. We'll get into this more this weekend on the weekly wrap. Just wanted to bring you your short daily dose. I like to keep these a little bit shorter. So again, thank you for listening. Thank you for watching. Make sure to subscribe on YouTube and follow us wherever you listen to podcasts. And be sure to listen this weekend because it's going to be an interesting one. So I'll see you then. Thank you.